about HCL Tech. Now, they have reported slightly muted results. EBITDA has actually gone down. Looking at the minutiae, the stock is trading above the 200-day weighted averages, exponential, simple and weighted. By the textbook definition, that means that the stock is firmly in the bull territory. Do you agree? And what do you expect from HCL in the near term? It has done better than all other in the IT pack in the last 1 year.
Sure. Look, my view on the IT pack, at least the big four, TCS, Infosys, HCL, and Wipro, largely the same. There is only the pecking order that you can perhaps argue on, but otherwise, I think that a lot of these names are perhaps going to be in some sort of a consolidation range for some time to come. Now, Wipro perhaps might continue to be the laggard as it has been for some time now. HCL is one of our top picks, so we can only have a pecking order amongst this. While you are right that the stock is way above its 200-day moving average, what is also comforting is the fact that today the stock is moving above its 20-day moving average, which also indicates near-term bullishness in the stock. But if I were to pick, let's say, a sector where I have to park fresh, capital, I don't think IT would just yet make the cut. And the reason being that, there is a lot of diverse, factors at play here. If the news from US is good, then perhaps the Fed will act up. If it's not, then anyway, it's a challenge, right? So that's why I think, these stocks will see some pressure in the near term. From my perspective, these are good stocks to have in your portfolio from a safety perspective, and let's say a nominal 10 to 12% kind of a standard return. But I don't see a very big momentum coming up in these stocks anytime soon.
Hi Kush, good morning. Kartik here. Just want to understand, why is HCL Tech the front runner when it comes to your own IT pack? I understand you're saying IT is not the territory to enter right now, but what makes HCL better than, let's say, the likes of TCS and Infosys for you right now?
Hi, Kartik. See, from a technical standpoint, the lens that I see these stocks from, if you see, this is perhaps the only stock that has sustained above its near-term averages, has given a better, relative return, compared to the other names. Also, when you see the spurt that comes in this stock is actually more reliable, it's volume-backed, and, the stock does tend to give that, spurt. TCS and Infosys, I mean, they've had their share of, up moves, but then they continue to fizzle out. So HCL Tech, if you see, has sustained above these key levels. Even the down move right now that you see, the stock had a support at 1450. It's a medium-term support. That's exactly where the stock rebounded from. And this is the only one that is above the 20-day moving average in the near term. So my guess is that, HCL will continue to outperform only from, a technical standpoint. As I said, from a medium to long-term perspective, I don't really see a momentum coming up. Perhaps a trading bet, once the results are out, as the results are out.
And just staying with IT stocks for just a little bit longer, Kush, do you think the macro data coming from the US obviously is one thing, but do you think things would change for the IT sector after US elections in November? Do you see any sort of a change linked to the election season and not specifically to inflation and GDP growth for India's IT sector?
Not really, because my focus is mainly on the kind of data flow that comes out. The election, like, if we were to take a parallel from the Indian economy, a lot of your infra stocks haven't really done as well, or rather, are actually probably steady, haven't really given that kind of a breakout yet. Why? Because, we're waiting the election results. Once that is out, perhaps big orders will come in. I think a lot of corporates also are, going to stay put, in the US. They are going to wait and watch the election results, how they go, before they make any kind of big plans and big announcements. But I would still suggest, or I would still say, that the economic data there will play a much bigger factor than the election outcome itself.
Tech Mahindra announced their results yesterday. They were disappointing to say the least. Net profits were down 41%, revenues were down 6%, but the stock seems to be up today almost 10%. Is it time to cash out, or is there another rally around the corner on Tech Mahindra? A quick one here.
No, very much a time to cash out. My suggestion is that, if you see the high for the day, which is 1350, is also the medium-term resistance level for the stock. That's where the stock has actually turned around from. No real triggers, just equally surprised that, with the kind of numbers that were posted, the stock is actually up, as much. But that said, I think 1350 is a resistance zone. We are seeing the stock, slip from there. Not a bad idea to take some money home and perhaps, exit this and switch to, some other alternatives.
Okay, coming to the domestic markets, the Nifty 50 opened slightly in the positive, but just marginally, almost flat. Nifty Bank is slightly in the negative, went down a little bit at 48,566.45 from 48,660 closing yesterday. Where do you see Nifty Bank going from here?
No, it's so interesting that you bring this up. See, I have a very simple theory here. This market till the elections are on will be a buy on dips market. I don't see a very big downside to the market. At least till the elections are on. That's the first view. That said, I also don't see a very big breakout. I know the moves that happened in the market yesterday, to be completely honest, was a little bit surprising because while we were expecting an upside, the momentum or the magnitude yesterday was a little on the higher side to our comfort as well. So from that perspective, the risk reward ratio is not favorable for a long buy, at the current levels. So this is a buy on dips market, but also a market where if you get, let's say, a 75 to 100 point rally on the Nifty, or perhaps a 300 point kind of a rally on the Bank Nifty, you should continuously cash out. While I said I don't see a big downside to the market till the elections are on, I also don't see a very big upside. I think the resistance levels, will be the highs that the markets have recently made, and we are fairly close to them. So I think there will be some sort of a consolidation going on, perhaps with a mild positive bias. But this is a market where you buy on dips, but you without fail continue to book profits also as we go along.
Kush, I'd like to pick your brains on one more sector. Nifty Auto opened slightly in the negative today, but auto major Maruti Suzuki is due to announce their results today. Continuing the trend in the last few quarters, the company is expected to post robust numbers in the March quarter, led by higher sales and strong volume growth. Revenue is expected to jump 20%, net profit as much as 45%, EBITDA over 50% year on year. Maruti Suzuki had earlier reported volume growth of 13% year on year, led by higher sales in the SUV segment that went up 71.5% year on year. Exports grew 21% year on year. I have two questions for you. The stock has not been amongst the best performers in the auto space over the last 1 year. Where do you see the focus of Maruti Suzuki in the coming year? EVs or SUVs, the segment that has done so well for them?
So I think the stock itself has actually done rather well. If you see for this year, from January onwards, the stock was below that 10,000 mark and already run up to 13,000. So we are seeing the neat 30% kind of a run in a stock as big as Maruti. So I think it's a fair point to say that the stock might continue to consolidate here for some time. But on the whole, we are very bullish on this space. Just to add one more line here, we're slightly more bullish on the auto ancillary space than the manufacturers themselves. But I think the entire pack will do well. Now, to answer your question, where do we see the focus? I think SUVs are something that has already been a part of Maruti's strategy. EV perhaps will start to become a part of this strategy. But from what I understand, Maruti typically has been a laggard in terms of catching market trends. So I think EV will perhaps take some more time before it takes center stage as a part of the strategy. I think SUVs are the place where they will continue to bolster their portfolio.
My second question is something that you already mentioned. The stock while it is not the best in the auto pack, this is trading way above the 200-day moving averages. Do you really see a rally round the corner? Because amongst the pack, it is not the best, but it is way above the whether it is weighted moving average, exponential or simple. It's trading way above all of them.
Absolutely, and see, let me put it this way: it depends on the kind of horizon that you're looking at. If you're looking at a near-term move, then a lot of it will be result based. Also, let me say one thing as a disclaimer, which is we typically don't recommend stock trading strategies from a near-term perspective, on the day of the result, because of course it can be a very volatile day for the stock. That said, if you look at the setup, there is something called a negative RSI divergence where the stock has actually moved to its previous high levels, but the strength seems to be missing. So I think even the markets are waiting for the result. But if I look at it from a medium-term perspective, there are pointers suggesting that the stock is poised to move higher from here. I think 14,500 is the next level to watch for on this stock. If I get any kind of a dip, let's say to 1200, 12,500 or below levels, I will be a buyer in Maruti for a target of 14,000 and 14,500.
Just to stay with the auto sector, Kush, how do you see the difference on the stock market when it comes to Maruti Suzuki versus the very close now number 2, which is actually a leader in the EV space, which is Tata Motors, and the third, Hyundai, also likely to list sometime this year. So, how do you see Tata Motors and Maruti on a technical chart in comparison to each other?
So Tata Motors has had a fantastic run, but it's gone into this consolidation mode. Now, if you're looking at it from a medium to a long-term perspective, this will turn out to be an opportunity. But from a purely trading perspective, I will give Maruti the edge just now, because if you see the momentum in the stock, it's it's way higher, way better than Tata Motor. So we are bullish on both these names, but from just a pure momentum or a trading perspective, my suggestion would be to stick to a Maruti. Tata Motors is also trying to inch higher, but then the 1040 kind of levels which have in the past also acted as resistance will continue to play. So the stock might consolidate here for some time. So from a momentum perspective, Maruti, but bullish on both.
Okay, and if Hyundai were to actually list in the Indian markets anytime soon, then how would the stock markets and the specific shares of Maruti and Tata get divided, or interest get divided?
Very honestly, I don't think by a whole lot. Typically, what we've seen is, when a company or especially a leader in the sector also lists the existing players, the existing listed players do get a shot in the arm, and we see a bit of a run up. But I don't think that really will be the case for likes of Tata Motors or Maruti. Already big names, the fundamentals are very clear out here. So while this might be a healthy competition now in the listed space, but I don't think there'll be too much of an effect. Also, just the sheer amount of capital floating around, I think that also will get absorbed, fairly easily. So I think these two companies will continue to run their course, except for maybe a brief, uptick.
What are your picks for our investors today?
Two of them, both of them on the buy side. First is Raymond. The stock has actually done extremely well, and now coming close to its all-time highs. So I think this momentum will continue and perhaps take it even past those highs. So 2170, 2220 is the target that we have on Raymond. 2080 is where we would place our stop loss. From a trading perspective, ITC is something that is now starting to gain momentum close to its 200-day moving average. Today, it just about hit the 200-day moving average and slipped below. I think the current rally will take it past that. So 446 and 455 are the near-term targets on ITC. 430 is where I would place my stop loss. But if someone wants to stay invested positionally also, both these stocks have a lot of room on the upside. And as a standard disclaimer, these are the stocks that we've shared with our clients also as a part of our advisory service.
Kush, I would like to pick your brains on one more result that came in yesterday, and that was in the banking sector. IndusInd Bank reported its Q4 results. Net interest income went up 15%. So did net profits. Gross non-performing assets, however, went up to 6,693.38 crores against 6,377.05 crores. With the focus these days of banks on non-performing assets, do you see that as a worrying sign? And where do you see IndusInd Bank script going from here?
I mean, for sure, it's a worrying sign. The only thing is that, what we're seeing is that perhaps the worst is getting factored in the price. Now, there have been times in the past where the stock has slipped to the 200-day moving average and rebounded from there. For the last 5 sessions, or perhaps market had a whiff or, an estimation of how things might pan out in the results. So the stock hasn't really done as much. In fact, it slipped below the 200-day moving average, now attempting to regain. It looks like perhaps the worst is priced in. The stock might see some more downside for a brief bit, let's say to 1460, 1450 odd levels. But from there on, the risk reward ratio on this stock will start to become extremely attractive. Also, very limited choices when it comes to the private banking space, isn't it? I mean, HDFC Bank is now starting to turn a corner around. But other than that, a lot of other names haven't really done as well. So I think this will continue to remain one of the interesting stocks in the private banking space. And even technically from a risk reward standpoint, I think it's becoming attractive. So if someone was considering a near term trade, perhaps you can look at 1420 as a strict stop loss. And if it does hold on to the 200-day moving average, perhaps a 100 rupee jump from here cannot be ruled out.
How very, Kush, do you think is the banking sector of the RBI's overreach? Is that something which is seeming to be a worrying trend? We've seen what happened with Kotak Mahindra Bank 2 days back, pretty much a repeat of what had happened earlier with IDFC Bank, and overall the whole fintech Paytm Payments Bank story also did not pan out too well for Paytm in the short term at least. So are banking stocks something to be wary of as a golden thumb rule right now?
Well, we are a little cautious on the bank Nifty. That would suggest that, of course, the stocks will also continue to reel under some sort of a pressure. But Karthik, I'm sure, you and I will both agree on this point that, whatever the regulators do as an action, is beneficial for for the clients, for the customers, and for public at large. And
Right.
that in the long run for the businesses also turns out to be, a very healthy move. So while in the near term these things can come across as a pressure, for the stock, I think in the long run whatever is good for the client is good for the business as well. Now that said, there is a possibility that this could perhaps continue to act as some sort of a pressure for the stock. My bigger concern is the FII selling. The markets have probably been a buy on dips, but the selling from FIIs has not abated at all. And historically, IT and banking have been two sectors where FIIs have had a good holding. So if that selling does continue to come around, then even on say perhaps some sort of good news, these stocks might perhaps remain under pressure, and hence the cautiously optimistic view on banking stocks and bank nifty.